AEHL Antelope Enterprise Holdings Limited General Overview and Trend. Antelope Enterprise Holdings has experienced extreme volatility over the past 3 months, rising from $2.34 in mid-June to a peak of $8.42 in early September. However, on September 10, the stock spiked sharply to $8.4207 before falling to $3.95 on September 11. The overall trend shows extreme volatility with an upward bias price and volume. The stock has shown extremely high volume on some days, particularly during the sharp spike on September 10 when volume exceeded 33 million. The volume pattern shows that significant price movements are generally accompanied by high volume, typical for volatile small-cap stocks. Moving averages EMA and SMA. Current price, $3.95 on September 11, is above some short-term moving averages but below longer-term ones. The 5-day SMA is $3.8481 and 5-day EMA is $3.8798, both below current price, indicating some short-term bullish momentum. However, the 10-day SMA at $3.6786 and 10-day EMA at $3.7118 are also below current price, while the 20-day SMA at $3.4801 and 20-day EMA at $3.5325 are lower. Longer-term moving averages like the 50-day SMA at $3.4125 and 50-day EMA at $3.3437 are also below current price, but the 200-day SMA at $4.4937 and 200-day EMA at $4.5754 are above current price, indicating the stock is still trading below its long-term average. Technical indicators. Technical indicators show a mixed picture, with short-term moving averages indicating some bullish momentum while longer-term indicators show the stock is still below its long-term average. VWAP is at 4,784, above current price, indicating the stock has traded below its average price for the period, despite the recent spike. Linear regression. Without specific linear regression values, I observe the stock has followed an upward trend over the past 3 months, but extreme volatility makes it difficult to determine a clear trend. The recent spike and subsequent fall show the stock is prone to sharp swings in either direction. Next trading day opening forecast. Given the recent volatility and closing price of $3.95 on September 11 with 5-day EMA at $3.8798, the next trading day's opening price might be in the $3.80-$4.10 range. However, considering the stock's history of sharp movements, this forecast carries high uncertainty. Resistance and support analysis and intraday movement patterns based on current price distance to resistance and support levels. Immediate resistance appears around $4.50-$5.00 based on recent price action. Support levels are at $3.50 and then $3.00. Current price at $3.95 is closer to resistance than support, suggesting the stock could test resistance soon if bullish momentum continues. Potential high and low values based on intraday ATR14 value. Without ATR14 provided, based on recent volatility, the stock could potentially move $0.50-$1.00 in either direction during the next session. This suggests potential high around $4.50 and potential low around $3.00. Possible scenarios. Bullish scenario: if the stock breaks above $4.50 resistance, especially with increased volume, it could target $5.00 and potentially recent peaks around $8.00. Bearish scenario: if the stock fails to hold above $3.50 support, it could retest the $3.00 level and potentially $2.50 if bearish momentum intensifies. Sideways scenario: the stock could consolidate between $3.50 and $4.50 as investors digest the recent volatility and await the next catalyst. Conclusion. Antelope Enterprise Holdings has experienced extreme volatility over the past 3 months, showing a general upward trend but being prone to sharp swings in either direction. The stock is currently trading above most short and medium-term moving averages, supporting the short and medium-term bullish outlook. However, the stock is still below its long-term moving averages, indicating it hasn't fully recovered from its long-term downtrend. The technical picture for AEHL is mixed, with short and medium-term trends bullish but long-term trend still uncertain. Investors should be cautious due to extreme volatility and consider tight stop-loss levels.